An emerging market is a country that has some characteristics of a developed market, but does not meet standards to be a developed market. This includes countries that may become developed markets in the future or were in the past. The term frontier market is used for developing countries with slower economies than emerging. The economies of China and India are considered to be the largest. According to The Economist, many people find the term outdated, but no new term has gained traction. Emerging market hedge fund capital reached a record new level in the first quarter of 2011 of $121 billion. The four largest emerging and developing economies by either nominal or PPP-adjusted GDP of the BRIC countries. The next five largest markets are South Korea, Mexico, Indonesia, Turkey, and Saudi Arabia. Iran is also considered an emerging market. Terminology. In the 1970s, less developed countries was the common term for markets that were less developed than the developed countries such as the United States, Western Europe, and Japan. These markets were supposed to provide greater potential for profit, but also more risk from various factors. This term was thought by some to be politically incorrect, so the emerging market label was created. The term is misleading in that there is no guarantee that a country will move from less developed to more developed, although that is the general trend in the world. Countries can also move from more developed to less developed. Originally brought into fashion in the 1980s by then World Bank economist Antoine van Agmel, the term is sometimes loosely used as a replacement for emerging economies, but really signifies a business phenomenon that is not fully described by constraint to geography or economic strength. Such countries are considered to be in a transitional phase between developing and developed status. Examples of emerging markets include many countries in Africa, most countries in Eastern Europe, some countries of Latin America, some countries in the Middle East, Russia, and some countries in Southeast Asia, emphasizing the fluid nature of the category. Political scientist Ian Bremmer defines an emerging market as a country where politics matters at least as much as economics to the markets. The research on emerging markets is diffused within management literature, while researchers including George Haley, Vladimir Kavint, Hernando de Soto, Usha Haley, and several professors from Harvard Business School and Yale School of Management have described activity in countries such as India and China. How a market emerges is little understood. In 1999, Dr. Kavint published this definition: emerging market country is a society transitioning from a dictatorship to a free market-oriented economy, with increasing economic freedom, gradual integration with the global marketplace and with other members of the GEM, an expanding middle class, improving standards of living, social stability and tolerance, as well as an increase in cooperation with multilateral institutions. In 2008 Emerging Economy Report, the Center for Knowledge Societies defines emerging economies as those regions of the world that are experiencing rapid informationalization under conditions of limited or partial industrialization. Quote, "It appears that emerging markets lie at the intersection of non-traditional user behavior, the rise of new user groups and community adoption of products and services, and innovations in product technologies and platforms." More critical scholars have also studied key emerging markets like Mexico and Turkey. Thomas Noir argues that financial imperatives have become much more significant and has developed the idea of emerging finance capitalism, an era wherein the collective interests of financial capital principally shape the logical options and choices of government and state elites over and above those of labor and popular classes. Julian Verkuel recently proposed a pragmatic definition of the emerging economies. as distinguished from emerging markets coined by an approach heavily influenced by financial criteria. According to his definition, an emerging economy displays the following characteristics: intermediate income. Its PPP per capita income is comprised between 10% and 75% of the average EU per capita income. Catching up growth. During at least the last decade, it has experienced a brisk economic growth that has narrowed the income gap with advanced economies. Institutional transformations and economic opening. During the same period, it has undertaken profound institutional transformations which contributed to integrate it more deeply into the world economy. Hence, emerging economies appears to be a byproduct of the current globalization. At the beginning of the 2010s, more than 50 countries representing 60% of the world's population and 45% of its GDP matched these criteria. Among them, the BRICS. The term rapidly developing economies is being used to denote emerging markets such as the United Arab Emirates, Chile and Malaysia that are undergoing rapid growth. In recent years, new terms have emerged to describe the largest developing countries such as BRIC, that stands for Brazil, Russia, India, and China, along with BRICET, BRICS, BRICM, Mint, Next 11 and Civets. These countries do not share any common agenda, but some experts believe that they are enjoying an increasing role in the world economy and on political platforms. It is difficult to make an exact list of emerging markets. The best guides tend to be investment information sources like economies and The Economist are market index makers. These sources are well informed, but the nature of investment information sources leads to two potential problems. One is an element of historicity. Markets may be maintained in an index for continuity, even if the countries have since developed past the emerging market phase. Possible examples of this are South Korea and Taiwan. A second is the simplification inherent in making an index. Small countries or countries with limited market liquidity are often not considered, with the larger neighbors considered an appropriate stand-in. In an Opal TV video, hedge fund manager Jonathan Binder discusses the current and future relevance of the term emerging markets in the financial world. Binder says that in the future investors will not necessarily think of the traditional classifications of G10 versus emerging markets. Instead, people should look at the world as countries that are fiscally responsible and countries that are not. Whether that country is in Europe or in South America should make no difference, making the traditional blocks of categorization irrelevant. Guegan et al. Also discussed the relevance of the terminology emerging country, comparing the creditworthiness of so-called emerging countries to so-called developed countries. According to their analysis, depending on the criteria used, the term may not always be appropriate. The 10 big emerging markets economies are Argentina, Brazil, China, India, Indonesia, Mexico, Poland, South Africa, South Korea and Turkey. Egypt, Iran, Nigeria, Pakistan, Russia, Saudi Arabia, Taiwan, and Thailand are other major emerging markets. Newly industrialized countries are emerging markets whose economies have not yet reached developed status but have, in a macroeconomic sense, outpaced their developing counterparts. Individual investors can invest in emerging markets by buying into emerging markets or global funds. If they want to pick single stocks or make their own bets, they can do it either through ADRs or through exchange-traded funds. The exchange-traded funds can be focused on a particular country or region. Commonly listed, various sources list countries as emerging economies, as indicated by the table below. A few countries appear in every list. Indonesia and Turkey are categorized, with Mexico and Nigeria as part of the mint economies. While there are no commonly agreed upon parameters on which the countries can be classified as emerging economies, several firms have developed detailed methodologies to identify the top-performing emerging economies every year. BBVA Research. In November 2010, BBVA Research introduced a new economic concept to identify key emerging markets. This classification is divided into two sets of developing economies. As of March 2014, the groupings are as follows: Eagles. Expected incremental GDP in the next 10 years to be larger than the average of the G7 economies, excluding the US. Nest. Expected incremental GDP in the next decade to be lower than the average of the G6 economies but higher than Italy's. Other emerging markets. Emerging Market Bond Index Global. The Emerging Market Bond Index Global by J.P. Morgan was the first comprehensive sovereign index in the market, after the EMBI+. It provides full coverage of the asset class with representative countries, investable instruments, and transparent rules. The EMBI Global includes only USD-denominated emerging markets sovereign bonds and uses a traditional, market capitalization weighted method for country allocation. As of March end 2016, the EMBI Global's market capitalization was $692.3 billion. For country inclusion, a country's GNI per capita must be below the index income ceiling for 3 consecutive years to be eligible for inclusion to the EMBI Global. J.P. Morgan defines the index income ceiling as the GNI per capita level that is adjusted every year by the growth rate of the world GNI per capita. Atlas method, provided by the World Bank annually. An existing country may be considered for removal from the index if its GNI per capita is above the index income ceiling for 3 consecutive years, as well as the country's long-term foreign currency sovereign credit rating is at A3/A or above for 3 consecutive years. J.P. Morgan has introduced what is called an index income ceiling, defined as the income level that is adjusted every year by the growth rate of the world GNI per capita, provided by the World Bank as GNI per capita Atlas method annually. Quote, once a country has GNI per capita below or above the IIC level for 3 consecutive years, the country eligibility will be determined. J.P. Morgan have established the base IIC level in 1987 to match the World Bank high-income threshold at $6,000 GNI per capita. Every year, growth in the world GNI per capita figure is applied to the IIC, establishing a new IIC that is dynamic over time. This approach ensures that our cutoff for index removal is adjusted by the world income growth rate, and not by the inflation rate of a smaller sample of developed economies. This metric essentially incorporates real global growth, global inflation, and currency exchange rate changes. Essentially, the introduction of the IIC establishes a higher, more appropriate threshold for country eligibility in the EMBI Global Diversified. Emerging Markets Index. The Emerging Markets Index by MasterCard is a list of the top 65 cities in emerging markets. The following countries had cities featured on the list. Global Growth Generators. Global Growth Generators, or 3G, is an alternative classification determined by Citigroup analysts as being countries with the most promising growth prospects for 2010 to 2050. These consist of Indonesia, Egypt, 7 other emerging countries, and 2 countries not previously listed before, specifically Iraq and Mongolia. There has been disagreement about the reclassification of these countries, among others, for the purpose of acronym creation, as was seen with the BRICS. Estimating demand in emerging markets. Estimating the demand for products or services in emerging markets and developing economies can be complex and challenging for managers. These countries have unique commercial environments and may be limited in terms of reliable data, market research firms, and trained interviewers. Consumers in some of these countries may consider surveys an invasion of privacy. Survey respondents may try to please researchers by telling them what they want to hear rather than providing honest answers to the questions. However, some companies have dedicated their entire business units for understanding the dynamics of emerging markets owing to the peculiarity